Continue the conversation about China. That country's recent crackdown on its homegrown tech sector has led to a raft of questions from global investors, including some anxieties over whether Americans will put as much money into U.S.-listed Chinese companies and whether Chinese firms will think twice about trading in the U.S. in the first place. Joining us now to talk about all of this is someone who knows China well, the markets well, activist, short seller Carson Block. He's the founder of Muddy Waters Research. Was that a watershed that we saw with Didi, would you say, Carson? Because we always knew that there was kind of a degree of fickleicity. I don't know, that's not a word, but fickleness with what Chinese regulators decide to, when they decide to do something, when they decide not to do something. Is everybody on notice now?
Yeah, well, I think it's actually pretty big. It caused me to change my thesis. So I felt until this happened that China would back down, would allow the PCAOB to inspect the auditors, and therefore the U.S. would not delist these companies based in China. But this changed my mind. I think that it's probable now that we will see these companies delisted. And I think that this was the Xi administration saying that, hey, we're not going to back down. We're putting China-based companies on notice. You need to start thinking about how you deal with the post-U.S. market listing world. And I think that's basically also that, she's thinking that the U.S. will go forward and will delist if she does not give on the PCAOB inspection issue. So that's what I think it means. I do think it's pretty big.
So it is big. What do you think changed there? There was a lot of nationalistic feelings after the celebration that President Xi presided over. Is that part of it? Was it the straw that broke the camel's back finally with Didi? Is a Cold War brewing economically? It has been, obviously, between China and the United States. Is this another salvo in that, or is it really about protecting private property?
Well, when you looked, and I was making this point in 2017, early 2017, that when you look at the relationship between the U.S. and China, in most sectors and industries that, well, at least where there's interface between U.S. and China, there was real tension. And the participants in the U.S. had been pushing back publicly against China. But the exception was financial services. This was kind of like the last high ground in the U.S.-China economic relationship. And, I think that's because, frankly, the banks and the finance industry was able to successfully lobby for so long to keep the channels open here. But you had a situation where after Luckin last year, we then had, Luckin happened during COVID, and all of a sudden Congress unanimously passed this bill that became the Holding Foreign Companies Accountable Act when President Trump signed it into law. So that basically set us on this collision course where either China had to relent and allow these PCAOB inspections that the U.S. has been trying to get in earnest at times since 2012, or there would be delisting. And I really did feel that China would ultimately relent because so many senior party officials have undisclosed holdings of these companies through proxies. I mean, this is real money to serious people in China that they have offshore. But I think when she surveyed the landscape, and I don't know why this moment, I mean, I'm not sure that there's anything particularly special about Didi, but I think that he realized it's inevitable that this is going to, or likely is going to happen. And rather than it seeming like this happened on the U.S.'s terms where we kicked these companies out, I think that she is trying to message this as, hey, China is determining the future of the companies here. China is the one driving this. Let's forget about the U.S. threats. We're doing this out of strength. So that's why I think they're doing it, as opposed to letting the process play out and letting the U.S. start the delisting process.
Shepard Smith here. Thanks for watching CNBC on YouTube.